Hello everyone, this is Dr. Moore of EfficientMinds.com. Today we're going to cover the introduction to my notes from the 2014 Global Asset Management Education Forum conference recently held in New York last week. To get to my presentation, you go to my website, EfficientMinds.com. Over here in seminars, if you hover over seminars and work your way down here to Game 4 Conference Notes and click there. Presentation comes up here. I recommend you make this full screen so you can see a little more clearly. Also, you can get rid of this little banner at the bottom by accurately clicking in the center of the X. If you miss it by just a little bit, you'll get some advertisements or something. So you got to be pretty precise there. Okay, to navigate through this presentation, there's a couple ways. There's the navigation buttons provided by Scribd at the bottom to let you go forward and back and all the way to the end or all the way to the beginning. You could jump to a particular slide. You can zoom in, you can zoom out. Also, you can click on the extreme left or extreme right-hand side to advance slides. And finally, this presentation is all hyperlinked, so if you want to jump right to is it time to buy or bail, you can click there and then start moving forward from there. All right, so this presentation is on the introduction, so we're just going to briefly cover the outline and some common themes from the conference. As you can see, I went to a number of keynote sessions and breakout sessions and have them organized here. Some common themes from all of those is first and foremost is know the answer to how much I can lose. Very important question when considering investing. One way to quantify that question or the answer to that question is to use a measure called value at risk. It wasn't talked about during the conference, but I've heard it before, and even, would you believe it or not, have a presentation on your favorite website on how to calculate it. So if you go to Mosaic of Analysis, over here in part 4, there's, and I'll zoom in here again so you can see it. Yeah, get rid of this banner. Over here at Value at Risk. So in this presentation, I step you through how to calculate value at risk in isolation or in a portfolio, and there's the measures. The English interpretation of the result is you'll know with a 5% chance you could lose VAR amount of dollars over the next N days. So if you can look at your retirement account, and if you had, say, $2,000 and it was all in a Vanguard Total Stock Market Index Fund, I've done this calculation just for fun, and it comes out to something like $411 or something. So, but I encourage you to do this for your own edification. I mean, it's good to know, to be mindful of how much can you lose, and once you're aware of that, you can make some allocation decisions if you're not comfortable with that. Another common theme is the market has not yet peaked, but is getting close. There's a couple of models, the Fed model and the Rule of 20 talked about during the conference. I think another person projected the S&P will rise from its 1,850 or so that it is today up to 1925 by the end of the year. Don't pull out your retirement account just yet, I guess is the common theme. There's some moderate growth ahead. You've got to be mindful of policy impact on investing. We have, in particular, investing overseas. There's a lot of policy changes, monetary, physical policy changes. Here, Fed's backing off of the quantitative easing. To be mindful of how that will impact your investing. Also, with regards to biotech companies, there could be regulation involved there that will impact profitability. For instance, if a company came up with a cure for cancer but charged $1 million a treatment, government may intervene for the better interest of the society at large to get that procedure cost from $1 million down to something more reasonable. Heard from a number of people that they're pretty bullish on Europe. Seems like they're working their way through their defaults of Greece and Spain and whatnot. And in fact, there was one data point that the yield to maturity on Spanish bonds has declined from 7% to 4% here recently. So they're pretty bullish on Europe, is what I was hearing. They were pretty concerned about emerging markets. Don't invest in all in Russia. Brazil is they're going to be overspent hosting World Cups and Olympics in 2016, and keep an eye on India and China. They may be important. Technicals do matter. Now, admittedly, I'm a primarily fundamental investor. If you go back to my website and you look at mosaic of analysis, all you see here are pretty much fundamentals. There may be a small element of technical analysis here in stock screening, but for the most part, it's fundamental. There's nothing in there about support and resistance and cup and handles and looking at moving averages. Those are all technical indicators. I was enlightened to hear a number of people talk about how you do need to pay attention to technical indicators, which makes sense. It's not a question of either or. It's how can they work together to improve your investment decisions. So don't ignore technicals, but don't do them exclusively either. And then finally, math skills are needed, but unfortunately lacking in current college graduates. This is a theme I heard from a number of presenters. It's unfortunate that our country, which was mentioned over in here, the middle class is struggling and shrinking. A number of folks have mentioned that. The investment in education and research and development in this country has declined. There's about a third of the number of science, technology, engineering, and math graduates now than there were in the past. But we need math skills to be competitive, to innovate. We need more math skills, in particular in financial services, which is in the last breakout session. The presenter mentioned that was the one skill he wished he had more and saw more of in new hires, is Excel. Not just being able to add two columns together, but being really deep in their understanding of in Excel. So I highly encourage you to learn as much as you can about math in general and Excel specifically, and maybe throw in there some statistical analysis tools such as SAS or R or Stat Graphics. Okay, that will conclude this introductory presentation. In the next video, we'll go over the global economy comments.